JB here, JB here. Hope everyone's doing outstanding. Let's see if this is working. There we go. Uh, August 13th, 9:07 a.m. on this fine Wednesday morning. Talk really quick about the market. Some names I'm looking at go from there. S&P into the green all-time highs after yesterday's rally. Interesting stuff, right? So, the CPI, you still see the headlines, despite hotter than expected inflation data, right? So I think it was just like a worse, a better than feared inflation read. And then now we have PPI data tomorrow. We have retail sales and consumer confidence Friday. So I think there's still some bumps. Uh, but, you know, uh, the more I start thinking about like the tariff situation and you try and come up with some rationale, right? And some of it's like I don't know if it was 2022 when all those layoffs were coming. It seemed like every uh, couple weeks or couple days, Meta was 5,000 people, 10,000 at all these firms, right? And some was because of uh, rising rates, right? Fed was rising rates to curtail inflation, and then some folks trying to get rid of the fat off the meat that was accumulated during COVID, right? Because when everything was getting stimulated with cash inflows, things like that, a lot of these tech names took on a lot of employees to meet demand, right? So to me, some of it, start wrapping my head around stuff, and it's like I know I keep talking about exporters taking a piece of the tariffs, importers taking a piece of the tariffs, and the consumer hopefully not taking too much burden of the tariffs. Although Goldman Sachs says it's going to be the brunt of the tariffs at some point. But then you have to think maybe the tariffs are just another one of those events that help prune companies, right? I mean, a lot of these companies over time, it's just how it works. It works in government, it works in schools, administrators. There's a lot of added layers of costs that get added on over the years that at some point there's an event that peels away those layers and gets costs and efficiencies back where they need to be. So not only to me, you think, okay, tariffs might impact the importer, the exporter, maybe the consumer, but maybe companies themselves will find out, hey, what can I do to cut costs or be more efficient so that my margins remain the same or aren't impacted as much, right? So everybody always looks at the worst case scenarios for what's going on right now, right? Well, I mean, that's what I read most of the stuff. It's horrible, right? You would think that grocery prices through the roof, tomato prices. I mean, the article a couple weeks ago in regards to 17% tariff on tomatoes from Mexico, restaurants going out of business in 3 months, right? I mean, all those are the headlines, and maybe that's reality. I'm not gonna, again, I try not to dismiss. I try to have an open mind, right, to both sides. So anyway, just food for thought this morning. But this morning, Market Watch queuing up their normal article, right? If the market's weak or there's signs of cracking, there'll be a negative headline. The next, the person who called the last 37 of the last two recessions is calling the next one right now, right? That's typically what would happen. Or today, it's the economic reset is underway, which drive the S&P to 7,500 next spring. It's funny, these headlines a couple months ago in April were nowhere to be found, right? Now all of a sudden, uh, you know, here they are popping up. Okay, all right. So that's kind of just so tomorrow, just PPI data, and PPI is more of like a leading indicator. So CPI is gauging the inflation. PPI is kind of like the producer side. So that that might not get into the CPI for some time. So maybe a little more forward looking there. So will be interesting. 628, 646 on the SPY. It's above the upper Bollinger Band on the SPY. So I mean, I would love to see a gap and run here today. I would not be surprised to see some chop. And then if we do get some pullback, 641, that's the upper Bollinger Band. And that's kind of what I'd be watching there. All right, so that's kind of also the Fed, right? So Fed meeting's not till September. The probability of a rate cut in September is now up to like 94%. If you look at a week ago, it was like 90%. So I don't think that's changed much. Um, it's just, we have Jackson Hole in a couple weeks. We'll see what conversation goes there. Is there going to be a jumbo cut come September? That'll be the next question on the table. All right. So that's quick overall market. So now just and I put on watch list today. It's like today's and tomorrow probably like harvest days, right? Where take positions that are doing well and start taking some off. I'm not saying I'm not going to add positions either, but I'm just going to be very selective because I'm not saying we're going to pull down to 628 on a SPY, but I can see that even if there is PPI data is a little rough tomorrow, I could see people trying to use that as an excuse to take some profits and become snowballing. So don't want to be caught with my pants down. All right. So that's overall market. Now, quick lemonade, which is actually over yesterday's high here in the pre-market. Cantor Fitzgerald initiated with outperformed $60 price target this morning. I mean, the stock's at close at 54.59. So his outperform rating is 8% or whatever that is upside. I mean, maybe they came out with they did their analysis a couple weeks ago when the stock was in the 30s. Maybe that's why. I don't know. But uh, anyway, needless to say, I was saying yesterday afternoon too. Lemonade, when it hit $56 yesterday, that was its highest level since 2021. So pretty remarkable stuff. Over four years of levels that it hasn't been to, and for like 2 years of its time, it traded under $20 between 2021 and now. So because of that, a lot of these shorts, unless they've been holding since 2021, and if you are, maybe they're holding for zero, I don't know, they're all underwater, right? And then of course the volatility on the stock is high, so it allows them to do probably some option shenanigans, sell stuff against their short to collect premium. Maybe they're doing that too, at least to mitigate losses. But you're doing that, plus you're paying interest, and the stock's at multi-year highs here. I mean, you have to think something's got to give. And I mean, I've been saying it, $30. I said it last in November, went up to $50. But I think it heads over $60. So if it does that, the thing is, once it starts moving again today, the premiums are going to be jacked. So it's going to be very hard to find a decent risk reward strikes. I'll just continue to hold those 60s, lock some of those in for 100%. And then this is, this is just from November's level. So you can see the breakout here, blue skies, right? All right, so that's limited. And then, if you think, and if you're short, you're like, how high can it go, right? Can it go to $100? I mean, seen crazier things. All right, so that's Lemonade. United Healthcare, nice gap off the open. It did it on Monday, right, and gave back those gains at 252. Uh, and then it did it again yesterday, but yesterday it actually held the gains all the way up to 262, gave it back, closed at 261.57. It's gapping here in the pre-market 266. They just announced this morning they're keeping a quarterly dividend, and they also announced, did they announce a buyback? Authorized quarterly dividend. So I mean, I don't know that they're in dire straits in regards to financial side of the business, but just another kind of decent sign on the stock that's been absolutely destroyed. Uh, been eyeing it to play for a bounce all last week. Finally pulled the trigger on Friday, and sure enough, we're getting a bounce here. I don't know if this is another bounce before the next leg. Right? Can't rule that out either. I don't think so. The same token, I'm going to be patient. So I'll probably lock a few more of my 270s in. They'll probably be up 300% at the open, probably more than that. And then maybe I'll look for some spec calls into next week. 289 is 50-day moving average. It hasn't been over the 50-day moving average since March. So could be a target, at least short term, for UNH. So that's UNH, nice trade there. IIPR. Finally got those calls yesterday too, kind of on a play of the possibility that marijuana is going to be declassified, that reclassified, not declassified. Also, there's FOMO in somebody's name, CGC, ACB, Tilray, and this is just a name that doesn't really get the same attention until the whole sector really starts to catch fire. And it still didn't really get too much attention until yesterday. And then yesterday up 8%. Got the October strikes, 15% dividend. The company has like 150 million in cash on hand. They're buying back stock. It's a REIT, so that their primary purpose is return value to shareholders via dividends, large dividends, right, outsized dividends. They had a big tenant that defaulted, and I think they were trying to like prune out some of the bad tenants that haven't been doing well. And I think some of the reason why the stock is coming under pressure, and I mean it's substantially off its highs. I think it doesn't even have to do much to bounce to get back over $60, right? So take a look at the 57.58. Looks like, well, actually it's 57.50. It looks like the churn area from May all the way through mid-July. I think once it gets over that, it's blue skies. And there's a gap to fill over six. I think it's 61 and change. Don't be surprised if I add more strikes. But the thing is, I'm going to lock some of the Octobers in at the open because those are 100%. Their CGC took a breather yesterday. Still eyeing those January $3 strikes, which actually didn't go down too much despite the stock closing in the red. I mean, it was only down 2% yesterday. When it's a penny stock, it's 3 cents to the downside. So not much relative to the stock, but what it did close in the red yesterday. And then Lulu, right? Holy smokes! I keep looking. I was looking yesterday. I was looking at the 202.50s to kind of get a lower strike. Then I was looking at next week 210s, and stock going all the way down to 186 yesterday, and then just bounced, and then boom, off to the races. 192, chopped around there for a while, then closed at the highs, and then it's gapping here this morning. You have Hanes brand, I think was acquired this morning. There's other catalysts here like positive earnings in the whole space. I have to think at some point this bounces. So Goldman Spectacular, I think they adjusted a price target today to like 230. That's on the heels of yesterday's Bard, kept their outperform rating, lowered the price target too. Just looks primed to bounce over $200. So we'll see what the 205s open. I would assume they're gonna be close to flat at the open. And then, if I can get some out to cover costs, I might look to get some strikes into next week, maybe the 212.50s or the 215s. Serve Robotics got downgraded yesterday by a boutique firm, Seaport Global. It's funny, Seaport Global covers SE Limited. So I don't even know what stocks they cover, but reversed the morning lows, closed into green. Well, last kind of like a save at the end of the day. Stick save, closed into green. One of these days it's going to take off, and look how tight it's getting. I mean, the Bollinger Bands are getting tight. To me, at some point, it's going to be explosive. Uh, so I'll just continue to sit on my hands there. I'm not going to add any more strikes. And then just quick on other names, MDB. I mean, I don't know how many I played it. Was it last week for some nice gains on a lotto? I'm still shocked it's down here. Have to think it's going to bounce. It's at 210 here in the pre-market, so I might look for some 220 strikes. 50-day moving average is 215. Um, and same with a line, right? So a line looked left to dead on Monday and then bounced yesterday up of 4%, and then maybe some continuation. I think it heads 150 plus in the coming days. VKTX, right? It's great to see it over 40 bucks, but the frustrating part is I'm in the August strikes not for it to rally, right? Unless it rallies substantially. I'm in it for the data, right? Because all GLP-1 data is going to come out any moment. The other thing is they have a lot of conferences in September, so now I think there's a lot of rumors or speculation that the data is not going to come out till September. I'm going to wait. Email CBOE. Hopefully, they'll come out with some higher strikes on the September calls. Right now, it's like 55s. Didn't get 65 70s. I might look to roll out to something like that. Just because if it's great data, I mean, stock's gonna be 80 90 bucks probably. If it's not, I mean, that's it for me with VKTX. So that's the thought process there. Solid day for Joby yesterday. It's gapping again this morning. Again, I'm not going to talk too much about Joby only because I mean, to me, it's like the risk reward. I mean, could it go into the 25, 26 handle? I mean, certainly could, but trying to play for it, it's a little tougher here. So maybe I'll continue to wait for the dust to settle. I'll just continue to hold the last of my October strikes. Um, and I think that's it, folks. I'm trying to think of some of the other stuff here. That's it. Let's have a great day. I'll be back on audio later. Rock and roll.